Welcome back to Crypto Hustle 101. This is part 2 on how to use the Fibonacci retracement tool in your trading strategy. In part 1, we went over how to use it in a ranging market. Now I'll go over how you use it to manage an uptrend. Let's start by jumping into the algorand USDT chart. This time I'm going to use the replay button to simulate real-time price action. And that's found up here. I'm going to go ahead and click about here. Alright, resize it. Alright, for a quick review on part 1, we're going to go ahead and use our Fibonacci retracement tool found over here. And go from this top to this bottom. And then we're going to draw our long zone between the 0.618 and the 0.786. And we'll go ahead and hit play. Alright, now what we're waiting for is price to come down in here. We can start thinking about going long from there. Alright, let's pause it. Alright, so now we're in this range, like yesterday. This would be a good place to start looking at your MACD, looking at other indicators, looking for a reason to enter a long from this box and below. Hit play again. As you can see, it's starting to consolidate inside of this green zone, going down a little bit, coming back up. We're just waiting. Oh, it's going down. Just like we talked about yesterday, at this point, the price is starting to leave the long zone, and now you want to go ahead and do your Fibonacci retracement in reverse to give you the short zone. Like so. Come over here. Go to this bottom right here. Back up to the top. Make sure the 1 is up here and the 0 is down here. Now we're going to go ahead and draw a short zone, again between the 0.618 and 0.786. Let's go ahead and make that red. Alright, let's hit play again and see what happens. Alright, we're going up. Inching our way up. Alright, let's go ahead and pause that right there. As you can see, price came up into this short zone, down, back into it again, got rejected, reversed back down, heading towards the green zone. Let's go ahead and hit play again. Alright. Pause it right there. Zoom in. Alright, after coming back down here, what happened with price action? We started making bullish market structure. You can see the W right here. Go ahead and draw it real quick so you can see it. And once it breaks this line right here, we started to go up. And at this point, we're back into the short zone. It's trying to decide what it wants to do. Go ahead and zoom it in. Hit play again. All right, let's pause it right there. Now let's look at what happened. All right, now at this point, we're making new highs. So now it's time to draw the Fibonacci retracement tool again and start from here. Let me go ahead and delete those. All right, we can go ahead and hide this. So we don't get confused. All right, so let's go ahead and zoom in here. So now we made new highs over here really quickly. Once it went past here, we're going to go ahead and draw the Fibonacci retracement tool again from the new highs. All right. All right, down to here. All right, so as you can see, we're now in a strong uptrend. So yesterday what we focused on the long zone, which is down here. How you will work this now is you want to look at the 0.236, 0.382, and the halfway mark. All right. So if price stays above here, you're a strong bull. It's strong and there's a good chance that you're going to keep going to higher prices. If it comes down to here, it's still a bull, but it's not as strong as up above this level. And the 50%, consider that the line in the sand. If we go past here, more than likely we're coming down into the long zone. All right. So what price did here is it came down. Line in the sand, bounced off it. Came back up, line in the sand, bounced off it. Started to make confirmed bullish market structure here. Went up, back down. This time coming to a higher low than these two right here. And from there, we come up, pass here, and go to a higher high. Let's go ahead and move this. So as you can see at this point, we retrace back, but we're in this point where the uptrend is really strong. So then it goes to the next high. All right, come down, back up, going higher. Let's hit play and see what happens. All right, coming down. Okay, pause it right there. All right, as you can see right now, price came down, checked here, bounced for a second, then dropped down. Now we're no longer in a super strong bull, but we're still in an uptrend. All right, let's hit play again. All right, let's look at what happened so far. Okay, price came up to here, came down, said nope, still strong, still trying to go higher. Came up, came down, broke through the 0.236. Okay, now we're coming down here. All right, break here, downtrend, downtrend. So once we got down to 50% mark, came up, came down, and if you draw your long zone, okay, as you can see, we came down, broke the 50, came up, dipped down into the long zone, and shot right back up, trying to get to new highs. Came back down, found support, came back up. Next thing you know, we're at new highs again. So let's go ahead and adjust our chart. See what we have right now. All right, before I do that, let's go ahead and bring this back over here. What we had to do is we had to, when it dipped down into here and shot back out, if we drew our fibs in reverse again, make it red. All right. So when price came back down into the long zone, it shot back up into the short zone. Just barely missed hitting the 0.886. Came back down, said I'm still a bull. Came back up. And then as we go to new highs, that's when you start adjusting your Fibonacci retracement to analyze from that point. And if you go back over here, we can see that the same thing that happens right here happened back here as well. Go ahead and turn this back on. Price came down into here, up into here, back down, then the new highs. Remove that stuff again. Zoom back in. down into the long zone, up into the short zone, back down, up to new highs. You're going to see the same patterns repeat over and over again as the asset goes through price discovery. So let's go ahead and readjust this and analyze the situation. All right, I'm going to go ahead and let this whole thing play out, and then we'll continue the video from there. All right, let's go ahead and exit out. All right, let's look at what we got here. Now, at this point right here, if I haven't already, I would take out half to 75% of the profits and then set a stop just below the 0.236 right here. And if it hits this, somewhere in this area, I would just get out of it completely and watch what happened. So as price came up, it did come back down, come near the line in the sand, come back up, come back down. It's going back and forth. Now it's ranging between these lows and this high. So it's back and forth, down, up. But as you can see over here, we're getting lower and lower highs, which only lets us know that we're going to start coming back down and the whole process starts over again. All right, let me go ahead and zoom this in some, pull this out. All right, so now all we're doing is waiting for this price to come back down to here and decide what it wants to do. Or maybe it'll come to the halfway point again, start making some W's, and come back up. But the whole point of this method is to make sure that you enter trades in this area or this area, whether you're going for a short here or a long here or a long from this point up, is that you don't actually enter anything in this area right here where you make a bad decision. That's how people lose money, because buying an asset that's good at a bad price still equals a loss. So that's going to be it for this video. Hope you guys got something from it, and see you next time.